Hello viewers, welcome you all back to my channel. I am Hashim Ali Khan. Presently, the subject going on is managerial accounting. In this subject of managerial accounting, the topic right now we are in is decision making. Before this topic, I have completed the topic marginal costing. So in marginal costing, I have explained you how marginal costing will be helpful to management for taking the decisions. And this topic, decision making, is concerned with how marginal costing will be helpful in solving the management problems. So there are innumerable problems are there faced by the management, and marginal costing will be a handy tool to solve those problems. So I have already uploaded the introduction part of decision making. What is decision making? How marginal costing will be helpful in decision making? I have explained you in detail in the first video, introduction to decision making. Then already almost to 12 problems I have solved on decision making. Hope my regular viewers have already watched the theory video and also 12 problems. Got a comment on how to solve the problem on decision making using marginal costing. So if you are new to my channel, I suggest you to visit the playlist of my channel. I have uploaded so many videos on different subjects of financial accounting, advanced accounting, cost accounting, corporate accounting, income tax. All these subjects I have uploaded so many videos. Select your subject, select the topic, watch the video and increase your knowledge. Now I am moving on to the next problem, that is problem number 13. But before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So before watching the problems, you must have a hard copy of the problem. Then only you can understand the solution. Remember, these decision making problems are unique problems. Every problem will be a different problem. So, and you have to understand. Understanding the problem is half solved. That's what comparatively compared to marginal costing problems, these decision making problems are a little bit difficult. So what is required is your concentration, your focus. Now I am reading of the 13th problem. Gulab Limited manufactures 3 types of products, namely Popular, Executive and Supreme. There's a proposal to close down the production of Popular. 3 products the company making: Popular, Executive and Supreme. There's a proposal, the company wants to close the Popular brand of the product. Now following are the details. Popular, Executive, Supreme. Units are given: 60,000 units of Popular, Executive 3 lakh and Supreme 90,000 number of units sold. And selling price per unit 35, 65, 95. Material per unit, labor per unit, variable overhead per unit. So this material, labor and variable overhead, if you add up, you will get the variable cost. When we have the selling price per unit and when we have variable cost per unit, we can calculate contribution per unit. Remember, contribution means selling price minus variable cost. Variable cost is not given in the problem. So we have to add up the material, labor and variable overheads to get variable cost. Then fixed overheads are given: 9 lakh, 27 lakh, 18 lakh. What is your recommendation to the management if the production of Popular is stopped? Assuming that, first question, no part of the fixed overheads can be saved. That means even if we stop the production of Popular, the total fixed overhead will remain same. If this is the situation, shall we drop the Popular product or not? We have to give the explanation. Second point, if fixed cost can be completely saved, if we can be able to save the fixed cost, then what is your decision? Should we drop the Popular or not? Then third question, if raw material prices go up by 20% and fixed overheads can be saved. In these 3 situations, we have to give the suggestion whether the Popular brand of the product should be stopped or not. That is the question. Now see the solution carefully. Statement of contribution and profit. First of all, we are going to calculate the profit, the contribution at present. That means when we are continuing the Popular brand. Now Popular, Executive, Supreme. Selling price per unit is given: 35, 65, 95. Variable cost per unit is not given. We are finding out by adding up material, labor and variable overhead. The material per unit, labor per unit, variable overhead per unit. Add up. Variable cost we got 28, 50, 70. We got the selling price, we got the variable cost. Easily we can find out the contribution per unit. So contribution per unit, selling price per unit minus variable cost per unit. So 35 minus 28, 7. 65 minus 50, 15. 95 minus 70, 25. This is the contribution per unit. And how many units we are selling, how many units are produced and sold? 60,000, 3 lakh and 90,000. Now if you multiply the number of units with contribution per unit, we'll get the total contribution. This is the total contribution. Multiply contribution per unit with number of units. 7 into 60,000, 4 lakh 20,000. 15 into 3 lakh, 45 lakh. 25 into 90,000, 22 lakh 50,000. We got the total contribution from the three products, Popular, Supreme and the Executive. Now total contribution. Contribution of Popular 4 lakh 20,000, 45 lakh, 22 lakh 50,000. If you added the contribution, the total contribution now at present 71 lakh 70,000. From total contribution we subtract the total fixed cost of all the three products. The fixed cost of Popular 9 lakh, the fixed cost of Executive 27 lakh, fixed cost of Supreme 18 lakh. The total fixed cost is 54 lakh. So 71 lakh 70,000 minus 54 lakh, that comes to 17 lakh 70,000. This is the present profit when we are continuing all the three products. 17 lakh 70,000 is the total profit we are getting right now. Now we'll attempt the questions. If we stop Popular brand, then what will happen? Shall we drop or not? Under three different situations. So three cases are in. One by one we'll take. If production of Popular is stopped, case 1, no part of fixed overhead can be saved. If this is the situation, even if we stop the Popular brand, the fixed cost will remain same. The fixed cost we cannot avoid. Fixed cost is compulsory there. So should we stop Popular or not? In this case, what will happen? If fixed cost cannot be saved, then Gulab Limited is better off continuing all the three products as each product is earning a contribution. See here, in every product we are having a contribution. So it is contributing. This Popular brand is contributing 4,20,000 towards contribution. If we stop Popular, our contribution will get stopped. We will not get the contribution. But fixed cost will be there. How much is the fixed cost for Popular? 9 lakh rupees. 9 lakh rupees compulsory, it is there. It is unavoidable. Even if we stop Popular product, we have to incur 9 lakh rupees. 9 lakh rupees compulsory, it is there. So we suggest to Gulab company, don't stop this Popular because Popular is contributing 4,20,000. If we do not produce Popular, our contribution of 4,20,000 will be stopped. That means even we have to incur 9 lakh rupees fixed cost. In that case, what will happen? Our profitability will become down by 4,20,000. The profits right now, how much we are getting? 17 lakh 70,000. If we stop Popular brand, our profit will decrease by 4,20,000 if we stop the production of Popular. So here, Popular is also earning a contribution of 4,20,000. If Popular is discontinued, profits of the company will fall by 4,20,000. The total profit 17,70,000 will fall by 4,20,000 if we stop the production of Popular. This will be the case if fixed cost cannot be saved. No part of the fixed cost can be saved. That means fixed cost cannot be saved. Compulsorily we have to incur the fixed cost whether we produce or do not produce. In that case, we suggest the company to carry on Popular brand because it is contributing 4,20,000. If we stop, our profit will get reduced by 4,20,000. That is the first case. Second case, fixed overhead can be completely saved. If we stop the production of Popular, then there is no need to incur the fixed cost of 9 lakh rupees. 9 lakh rupees we will save. We'll get the benefit of 9 lakh. How much is the cost? What we will not get? 4,20,000 contribution will not get. See here, we will not get 4,20,000, but we will get a benefit of 9 lakh rupees. We can be able to save 9 lakh rupees. That means no need to incur fixed cost. Then what will happen? Statement of contribution and profit. Contribution. How much contribution we are getting? 4,20,000, 45 lakh, 22 lakh 50,000. This is the contribution. From contribution, I am subtracting the fixed cost. The fixed costs are 9 lakh, 27 lakh, 18 lakh. 9 lakh, 27 lakh, 18 lakh. Subtract. 420 minus 9 lakh, 4 lakh 80,000. 4 lakh 80,000 is the loss. 4 lakh 20,000 contribution minus fixed cost 9 lakh. That means minus 4 lakh 80,000. Minus 4 lakh 80,000 means there is a loss. There is a loss in case of Popular. Executive, there is a profit of 18 lakh. Supreme, there is a profit of 4 lakh 50,000. So, if fixed overhead can be completely eliminated by discontinuing a particular product, then Gulab Limited must drop Popular and focus only on Executive and Supreme. If it is compulsory to incur for 9 lakh rupees, we cannot be able to save. Here we cannot be able to save. Here we can be able to save. That means fixed overhead can be completely saved. अगर Popular product नहीं बनाए तो fixed overhead incur करने की भी जरूरत नहीं है. In that case, we stopped the production of Popular. We stopped the production of Popular because it is incurring a loss of 4 lakh 80,000. So why to incur 9 lakh rupees and get a contribution of only 4 lakh 20,000? So we should not get a loss. So we will focus only on Executive and Supreme. So and focus only on Executive and Supreme. This will result in a profit of 22 lakh 50,000. See here, 18 lakh plus 4 lakh 50,000. If we stop the production of Popular, we will get the profit from Executive and Supreme. So 18 plus 4 lakh 50,000, 22 lakh 50,000 will get the profit, which is more than the present profit of 17 lakh 70,000. If we continue all the three products, we are getting a profit of 17 lakh 70,000. If we drop the product of Popular, no need to pay fixed cost. It is saying no need to pay fixed cost, can be completely saved. In that case, we suggest to drop the product of Popular and focus only on Executive and Supreme. The total profit will be 22 lakh 50,000, which is more than 17 lakh 70,000 by rupees 4 lakh 80,000. So if we drop completely Popular, our profit will increase by 4 lakh 80,000. Second case. Now third case. Raw material prices go up by 20% and fixed overheads can be saved. See here. Raw material prices go up by 20%. What was the earlier raw material prices? 15 rupees for Popular, 25 rupees for Executive, Supreme it is 35. These are the raw material prices. It is saying that raw material prices have gone up by 20%. So 15 into 20%, 3 rupees. So add up 3 rupees, 18 rupees. So raw material cost will become 18. Now see here. Raw material prices go up by 20% and fixed overhead can be saved. Statement of cost and profit. Selling price remains same. 35, 65, 95. 35, 65, 95. Raw material price will increase by 20%. So 15 rupees add 20% will get 18. 25 rupees add 20% you will get 30. And 35 rupees add 20% you will get 42. So 18, 30, 42. These are the material prices after increasing by 20%. Then labor and variable overhead remains same. Whatever is there, labor and overhead, variable overhead, the same labor and overhead. The variable cost per unit 31, 55, 77. These are the VC per unit. Now we can calculate contribution per unit. So contribution per unit, selling price minus variable cost, 35 minus 31, 4, 65 minus 55, 10, 95 minus 17, 18 rupees is the contribution per unit. Now total number of units are given 60,000, 3 lakh and 90,000. Total contribution 2 lakh 40,000, 4 into 60,000. Contribution per unit into number of units 2 lakh 40,000. 10 into 3 lakh 30 lakh. 18 into 90,000, 16 lakh 20,000. Total contribution minus fixed cost. Fixed cost 9 lakh, 27 lakh, 18 lakh. So we are getting a loss. In Popular brand, we are incurring a loss of 6 lakh 60,000. Then Supreme Executive 3 lakh rupees profit. Supreme, there is a loss of 1 lakh 80,000. Now the question, shall we stop the production of Popular? Yes, Popular production should be stopped. We can be able to save the fixed cost. Fixed overheads can be saved. That means if we do not produce Popular, 9 lakh rupees we are saving. There is no need to pay 9 lakh rupees. So we should not produce Popular. And even Supreme also incurring a loss of 1,80,000. We suggest in this case to make only executive because it is giving a profit of 3 lakh. So here if material prices go up by 20%, the product Supreme should be compulsorily dropped since it will incur loss. Supreme should be dropped. If fixed overheads can be completely eliminated, then Gulab Limited must drop Popular. Popular product also should be dropped because its fixed cost is more than the contribution. Contribution we are getting only 2,40,000, whereas fixed cost we are incurring 9 lakh rupees. So why we incur 9 lakh rupees unnecessarily? We can be able to save 9 lakh rupees. Drop the products Popular. Then Gulab Limited must drop Popular. The company should focus only on executive, which gives a profit of rupees 3 lakh. That's it. This is the end of problem number 13. Come on, now we'll start the next problem. It is problem number 14. Ravindra Limited produces 20,000 units of a product Shine. So company Ravindra Limited. The product name is Shine. 20,000 units are produced. It has spare capacity to produce another 10,000 units. The current breakup of cost of Shine is as under. So for making this 20,000 units of Shine, the cost incurred are material 2 lakh, labor 1 lakh, variable overhead 20,000, fixed overhead 1,50,000. Fixed overhead include 40,000 for depreciation also. Shine is sold at 30 rupees per unit. It is proposed to manufacture Bright along with Shine because the company is having some spare capacity. So to utilize that spare capacity, the company has an option to make another product. That product is Bright. The company can make the product Bright along with Shine. The installed capacity of Bright will be 15,000 units. This will require 2,50,000 additional investment over and above the existing 5 lakh rupees investment. Presently, the company has invested 5 lakh rupees. Apart from that, still 2.5 lakh, 2,50,000 rupees more has to be invested for making the new product Bright. So Bright requires additional investment of 2,50,000. These to begin with, 10,000 units of Bright can be manufactured and sold. So capacity is 15,000, but presently we can manufacture and sell only 10,000 units of Bright. And this can be sold at rupees 20 each. Selling price of Bright will be 20 rupees each. Rupees 15,000 to a fixed overheads apart from 10% depreciation on machinery will be needed. So for making this Bright product, 15,000 rupees fixed overheads have to be incurred. Apart from that, 10% depreciation on machinery will be needed. Out of the new investment, 50,000 will be required for working capital. See, the total investment will require 2,50,000. In that 2,50,000, 50,000 rupees we require for working capital. The remaining 2 lakh rupees is the machinery. Remaining 2 lakh rupees. Total 2,50,000. Out of 2,50,000, 2 lakh rupees are machinery and 50,000 rupees is the working capital. So depreciation on machinery is required at 10%. So 10% of 2 lakh, 20,000 rupees is the depreciation. So total fixed cost required is 15,000 rupees fixed overheads plus 20,000 rupees depreciation. So 15,000 plus 20,000, 35,000 rupees is the fixed cost in making Bright product. The cost estimates of Bright are material 10 rupees per unit. So how many units we are making now? 10,000 units of Bright. So each unit require 10 rupees material. So 10,000 into 10, 1 lakh rupees are required for material. Labor 3 rupees. 3 into 10,000, 30,000 rupees labor. And variable overhead 1 rupee. 1 rupee into 10,000, 10,000 rupees are required for variable overhead. Is it advisable to introduce Bright? Now we have to evaluate whether Bright should be introduced or not. Right? So we'll compare it. What is the present profit with Shine? What would be the profit if we combine Shine and Bright? How much profit will increase? That comparative statement we will make. Now see, statement of contribution and profit. Shine, Bright, total. 3 columns I have prepared. Shine is the existing product. The company presently makes 20,000 units of Shine, whereas the company has a proposal to make 10,000 units of Bright. The Shine Bright total. First of all, we'll take the sales. Presently, Shine product is sold 20,000 units at rupees 30 each. It is given in the problem. The per unit Shine product 30 rupees. So 20,000 into 36 lakh rupees is the total sales of Shine. Bright. 10,000 units of Bright we are going to make, and each unit will be sold at rupees 20. So 10,000 into 22 lakh rupees the sale proceeds of Bright. So total sales will be 8 lakh, 6 lakh plus 2 lakh. Sales over. Now we calculate the variable cost. Variable cost consists of material, labor, overhead. In the problem directly it is given the Shine product, old product. The material 2 lakh, labor 1 lakh and overheads 20,000. So total variable cost is 3 lakh 20,000 for Shine, current product. New product Bright. Bright carrier 10 rupees per unit is the material. 10 rupees per unit is the material. So 10 into 10,000, 1 lakh rupees material. Labor. Labor 3 rupees per unit for Bright. So 3 into 10,000, 30,000 rupees is the labor. Overheads. Variable overhead 1 rupee per unit. So 1 rupee into 10,000, 10,000 rupees. The total variable cost will be 1 lakh 40,000. The total variable cost 3 lakh 20,000 variable cost for Shine and 1 lakh 40,000 variable cost for Bright. Total variable cost 4 lakh 60,000. We have sales, we have variable cost. So sales minus variable cost will get the contribution. So contribution, sales minus variable cost. 6 lakh minus 3 lakh 20,000, 2 lakh 80,000. 2 lakh minus 1 lakh 40,000, 60,000. Then 8 lakh minus 4 lakh 60,000, 3 lakh 40,000. Or you can add up 280 plus 60, 3 lakh 40,000. Contribution will be calculated. Now fixed cost. From contribution, if we subtract fixed cost, we'll get the profit. Fixed cost. The present fixed cost for Shine is given in the problem, 1 lakh 50,000. No calculations, nothing. In the problem, the fixed overhead for Shine is given 1 lakh 50,000. For fixed overhead for Bright, we have to calculate. It is given in the problem that 15,000 rupees fixed overhead we require for Bright. Apart from that, 10% depreciation on machinery we have to provide. So what is the cost of the machinery? 2 lakh. How 2 lakh? The new investment, additional investment required is 2 lakh 50,000. Out of 2 lakh 50,000, 50,000 is the working capital. Day-to-day expenses we have kept 50,000. So 2 lakh rupees is the investment in machinery. So 10% of 2 lakh, 20,000. So 15,000 plus 20,000, 35,000. Here clearly I have written 15,000 given in the problem, fixed overhead, plus 10% of depreciation on machinery. So 2 lakh 50,000 minus 50,000 is the working capital. So 2 lakh 10%, 20,000. 35,000 is the fixed cost on Bright. So total fixed cost 1 lakh 50,000 plus 35, 1 lakh 85. Subtract, we'll get the profit. Contribution minus fixed cost, we'll get the profit. So 280 minus 150, 1 lakh 30,000 profit we are getting from Shine. 60,000 minus 35,000, 25,000 rupees profit we are getting from Bright, new product. The total profit 340 minus 185, 1 lakh 55,000. If you add up 130 plus 25, 1 lakh 55. That means we are getting a profit of 25,000 rupees from Bright. If we make Bright product, we are getting a profit of 25,000. In other words, our profit will increase by 25,000 if we make the product Bright. If we do not make the product Bright, our Shine product will give a profit of rupees 1 lakh 30,000, only 1 lakh 30,000. If we make Shine and Bright, both, our profit will be 1 lakh 55,000. That means the Bright will increase our profit by 25,000 rupees. It is asking you the same thing. Is it advisable to make the Bright? Yes, it is advisable to make the Bright product because our profit will increase by 25,000. But one point is there. By investing 2,50,000 rupees, we are getting a profit of 25,000. That means what is the profit on investment? Return on investment. Return on investment is only 10%. By investing 2,50,000, we are getting a return of 25,000. So 25,000 profit, 2,50,000 investment. So 25,000 divided by 2,50,000 into 100, you will get 10%. ROI, return on investment, is 10%, which is very low. So company has to evaluate, is there any other product which can give more profitability than this Bright? Evaluate. If it is there, so we can produce the other profitable product. This product will give the profit, but the profitability is very low. Bright profitability is very low. If there is a possibility that Shine product can be further increased, we can increase the sale of Shine product. So we should expand the Shine instead of making the Bright. We can expand the production of Shine if there is a possibility that Shine can be sold more number of units, because the Bright product will give the profit, but the profitability is very low. So see if there is any other option which give more profitability, we can evaluate. Otherwise, we can go for Bright. This is the explanation. So here I have written, introducing Bright will result in an additional profit of 25,000. However, it requires an additional investment of 2,50,000. The return on investment is only at 10%. 25,000 divided by 2,50,000 into 100. 10% profitability we are getting. It is very low. Management must see, if there are other projects that can result in higher profitability. Evaluate, is there any other product which gives more profitability? For example, if Shine can be sold more, it is preferable to increase the production of Shine rather than introducing Bright. This is the explanation of 14th problem. Now see the 15th one. In an oil mill, 4 products emerge from a refining process. The total cost of input during the quarter ending March 1983 is 1,48,000. Oil refinery, it is extracting, it is refining oil. So the total cost of input is 1,48,000. The output, sales and additional processing cost are as under. Product A, OXE, BOXE, COXE, DOXE. OXE is common, so simply we call it as ABCD. In this refining process, oil refining process, 4 joint products are manufactured. 4 joint products are manufactured. So first of all, the company has incurred a joint cost of rupees 1,48,000. After incurring 1,48,000, the company got 4 products A, B, C, D. And how many liters output? A, 8,000 liters, B, 4,000 liters, C, 2,000 liters, and D, 4,000 liters. These are the output. Additional processing cost after split off point. That means, see, there are 2 costs incurred, one before split off, one after split off. Before split off cost is called joint cost. The company has incurred a joint cost of 1,48,000. After incurring 1,48,000, then 4 products are emerged, A, B, C, D. Now we can further process this A, B, C, D and sell it as finished goods. The further processing cost after split off point are 43,000 rupees are required for further processing of A product, and 9,000 rupees are further processing cost for B product. No further processing for C product. That means compulsorily C has to be sold at split off point. It cannot be further processed. D, further processing cost 1,500. Sales value. Then after further processing, the sales value will be 1,72,500 for A, then 15,000 B, 6,000 C, 45,000 C, D. These are the sales value of the 4 products after further processing. Now, in case these products were disposed of at the split off point, that is before further processing, the selling price would have been A, 15 rupees, B, 6 rupees, C, 3 rupees, D, 7.5. See, the company has the option whether to sell the products at split off point or further process it and sell it as a refined product, finished product. So 2 alternatives. The company can sell at split off point, or the company can further process it and sell it a finished product. So if it sells at split off point, the selling price will be 15, 6, 3, 7.5. Prepare a statement of profitability based on the following facts. If the products are sold after further processing is carried out in the mill. Second point, if they are sold at split off point, we have to prepare a statement of profitability showing how much profit each product we can get if we make further processing. First question. Second question, if we sell at split off point itself, what is the statement of profit? Then we can get two profits if we sell after further processing and if we sell at split off point itself. So first of all, statement of profitability of oil mill after carrying on further processing. After carrying on further processing, what is the statement of profit for the quarter ending March 1983? Not the columns required. First column, product ABCD. Then sales value after further processing. If we make further processing and sell it ABCD, the sales values are given in the problem. 1,72,500, 15,000, 6,000, 45,000. Total sales value 2,38,500. Then share of joint cost. See, the joint costs are 1,48,000. This 1,48,000 is the cost incurred before split off point. Before split off point, ABCD बनने से पहले का खर्चा 1,48,000. This 1,48,000 will be apportioned in the ratio of sales value at the split off point. Sales value at split off point. The sales value at split off point is given in the problem. Here in working note, sales value at split off point. A selling price 15 rupees, B selling price 6 rupees, C selling price 3 rupees, D selling price 7.5. These are the selling price. And output liters. How many liters of ABCD are produced? 8,000, 4,000, 2,000, 4,000. Liters are given. Now multiply. Each liter 15 rupees. So 15 into 8,000, 1,20,000 is the sales value of A at the split off point. At the split off point, this is the sale value of A. B, 6 into 4,000, 24,000, 3 into 2,000, 6,000, 7.5 into 4,000, 30,000. These are the sales values of ABCD at the split off point. Now we find out what is the ratio of the sales. The ratio of sales is 1,20,000 is to 24,000 is to 6,000 is to 30,000. अब इसमें से 3 zeros. If we cancel 3 zeros, it will become 120. 3 zeros common है. So we are cancelling 3 zeros. 120, 24, 6, 30. 120, 24, 6, 30. If we simplify, all the values are divisible by 6. So 6 2s are 12, 20. 6 4s are 24. 6 1s are 6. 6 5s are 30. So we can simplify the ratio and make it 20 is to 4 is to 1 is to 5. The joint cost of 1,48,000, the pre-separation cost, before split off cost, the cost is 1,48,000, will be apportioned in the ratio of 20 is to 4 is to 1 is to 5. If you add up 20 plus 4, 24, 25, 30. So 20 by 30, 4 by 30, 1 by 30, 5 by 30. Here, A. The total joint cost is 1,48,000. 1,48,000 total joint cost given in the first line into 20 by 30. 30 we got it here. 20 plus 4 plus 1 plus 5, 30. So 20 by 30. You will get 98,667. This is the share of joint cost of A. Similarly, share of joint cost of B. 1,48,000 into 4 by 30. Here 4. 4 by 30, 19,733. C, 1,48,000, 1 by 30, 4,933. D, 1,48,000, 5 by 30, 24,000. So total 1,48,000 we have divided between A, B, C, D in the ratio of sales at split off point. So here you should take share of joint cost. 98,667, 19,733, 4,933, 2,466. 1,40,000. Further processing cost. The further processing costs are given in the problem. अगर स्प्लिट ऑफ के बाद अगर फर्दर प्रोसेस करें तो कितना एक्सपेंडिचर होगा? तो ए 43,000, 9,000. सी नो एक्सपेंडिचर, नो फर्दर प्रोसेसिंग, 15 टोटल 53,500. Now total cost. Total cost means pre-separation cost and post-separation cost. Before split off point, after split off point. This is the before split off point, joint cost, and these are the further processing costs. Add up these two. 98,667 plus 43,000, 141,667. 19,733 plus 9,000, 28,733. 4,933. 24,667 plus 1,500. So total cost. Profit is nothing but the difference between sales minus total cost. Sales we have here and total cost we have. So 172,500 minus 141,667, 30,833 is the profit of A. B, 15,000 minus 28,733 minus 13,733. That means there is a loss because cost is more. Sale value is only 15,000 whereas cost is 28,733. So we will incur a loss on B product, 13,733. Then 6,000 minus 4,933, 1,067. 45,000 minus 26,167, 18,000. So 30,833 minus 13,733 plus 1,067 plus 18,000. 37,000 is the total profit. So total profit 37,000 we are getting if we further process it. If we make further processing and sell the finished product, we'll get 37,000 is the total profit. Now it is asking you to show the profitability if we sell at split of point itself. That means the company will not make further processing. Further processing will not be done. All the 4 products A, B, C, D will be sold at a split of point. Then what is the profit? Products A, B, C, D. Price at split of point. Problem में दे दिया split of point और price कितना है 15,637.5. 15,637.5. Output in liters. How many liters of A, B, C, D are produced? 8,000, 4,000, 2,000, 4,000. Now value. Multiply selling price with output. So 15 into 8,000, 1,20,000. 6 into 4,000, 24. 3 into 2,000, 7.5 into 4,000. These are the sales value. Now, only one cost we have to take. That is share of joint cost. This is the share of joint cost. Joint cost 1,48,000 है और 1,48,000 को हम divide कर दिए A, B, C, D. These are the share of joint cost. Now subtract कर दो. Sales value minus share of joint cost. Value at split of point minus share of joint cost. We'll get profit at split of point. So profit at the split of point. 21,333, 4,267, 1,067, 5,333. Total profit is 32,000. So if the company sells all the 4 products at split of point, then the total profit 32,000. If the company make further processing after split of point, the total profit will be 37,000. That's all. So this is the end of problem number 15. So totally 15 problems I have completed. So I have explained you to the best of my ability, explaining each and every point. So if you want the complete knowledge, watch the video from the beginning till the end. Don't skip in between to get a complete knowledge. Remember, your objective should not be just to pass the examination by solving only simple problems. But you must have the ability to solve even complicated problems. These decision-making problems are a little bit complicated because first of all, you have to understand the problem. Without understanding the problem, it is useless to watch the video. So hope you are understanding my lecture. If you are satisfied, give a like to the video. Share it in your group, in your friend circle, so that more students can watch these videos, enhance their knowledge, and give your comments regarding these lectures. And don't forget to subscribe if you have not yet subscribed to my channel. We'll continue the next problem in the next video.